So Maria is feeling super excited and confident now because she's even using a trick that she learned from her friend. She's actually pulling up her QuickBooks Self-Employed profit and loss on one side of her screen, and she's pulling up her Schedule C from Form 1040 on the other side of the screen. Why is she doing that? Because she actually wants to do something called tracing the numbers. And what she's going to do is she's going to look at her Schedule C information from QuickBooks Self-Employed and see where it shows up on the actual form. This would be the same idea as if she went ahead and sent her data to her tax professional. This would be the return her tax professional would send to her. So now she can actually go back and review her tax returns going forward. So again, she's feeling super financially confident and pretty tax savvy as well. So here's what she's going to do. She is going to first start down the Schedule C, and now she knows that the first part is her descriptive information. So there's her Social Security number. There is the code, which is actually called a NICS code, the type of business that she is. She is a virtual assistant, so that looks perfect. There's her address. She understands that the accounting method is cash, which means she's going to report all of her money when she actually receives it, and she's going to report all of her expenses when she actually pays them. That is the simplest form of accounting, and she chose that accounting method, and she is okay with that. She also understands the options that were chosen for G, H, I, and J. Specifically, materially participates means that this is her main source of income. She participates in this actively. She started this business this year. And most importantly, she now understands her requirements to not only pay her 1099 contractors, but also capture that information in case she's required to file 1099s. Again, those are for independent contractors that worked with her in her business. Then she starts here on part 1, and she's like, awesome. That number looks exactly like the number from my QuickBooks Self-Employed business income. She keeps going down on her Schedule C, and she's looking at it against her expenses area of her QuickBooks Self-Employed profit and loss. So ultimately, she's basically cross-referencing what's in QuickBooks Self-Employed with what's inside of her Schedule C. Now, the reason why this is so important is because regardless if TurboTax prepared it for her, which means it's a self-prepared return, or if a tax professional prepared it for her, which means it was prepared by a tax preparer, but she is still ultimately the person that's going to sign this return and is ultimately responsible for what's getting reported on the return. So she definitely wants to feel confident in what she's reporting on this return. Her bottom number on the total expenses in self-employed is $42.73, which matches her bottom number on her total expenses on the Schedule C. Ultimately, her final number of net profit, line 31, is $19,380, which she knows is the same here in her self-employed product. It's just a little rounding difference of $1. So again, she's feeling super confident with the QuickBooks Self-Employed data transferring over into the Schedule C data. Now, what we're going to end this lesson on is how everything ties back to the Form 1040. So now it's time for Maria to do her last review of her Form 1040 with the attached schedules. She's going to start on the very first page, which is Form 1040, page 1. She's going to look at her filing status, which is single. She's going to double check her descriptive information. And then she's going to scroll down and see that the first line number is 7A, which is calling out that this is coming from Schedule 1, line 9. She also sees here that she has an adjustment of $1,369, which is giving her an adjusted gross income of $18,011. She qualifies for the standard deduction of $12,200, and she qualifies for a qualified business income deduction, which is specific to being a sole proprietorship, of $1,162. So if she adds those two numbers, she actually has deductions of $13,000. So she takes her $18,000, subtracts it from $13,000, and her taxable income, 11B, is $46.49. Her next page is actually page 2 of the 1040, which actually is going to continue with her tax calculation. She's going to see that based on a taxable income of $4,600, she's essentially in the 10% tax bracket, which means that she has a tax liability of $463. However, she owes self-employment tax because as a sole proprietor, she knows she owes self-employment tax. She owes $2,700 of that, so her total tax liability is $3,200. Hopefully, she's paid some tax throughout the year, so in that case, she's really going to file her return to either figure out whether she overpaid or whether she owes a tax liability. But now what she wants to do is figure out where these numbers came from. Where did the $19,000 come from? And where did the $1,300 come from? So let's go ahead and look at the Schedule 1. We are now in the Schedule 1, which is a schedule that explains additional income and additional adjustments that are happening within your tax return and usually showing up on Form 1040. So for instance, in Part 1, additional income, she's calculating $19,380 of Schedule C income. Well, that looks very familiar because she already figured that out when she did her tracing of her QuickBooks self-employed income against her Schedule C net profit on line 31. But she sees an adjustment of deductible part of self-employment tax attached Schedule SE of $1,369. Where is that coming from? Well, she needs to go ahead and look at her Schedule SE. And that's where she's going to go next. When she goes to her Schedule SE, she realizes that essentially what's getting calculated here is her self-employment tax. It's starting with her line 31 of her net profit from Schedule C. It's taking 92.35% of that. Then it's taking that amount and multiplying that by the self-employment tax percentage. That gets her to a tax liability of $2,738. But she gets to deduct half of that on her Form 1040, page 1, and then she owes all of it on her Form 1040, page 2. So essentially, she's really just paying for half because the other half is a deduction for her. So she understands that much better now. So she now understands where the $19,000 comes from. She understands where the $1,300 comes from, which is half of her self-employment tax. She understands her deductions, and she understands how the taxable income is calculated. She goes to her page 2. She understands how the tax is getting calculated based on her tax bracket. She knows why she's owing an additional $2,700 because that's the self-employment tax. And she understands that if she adds her income tax plus her self-employment tax, that's her total tax liability. Again, she has been paying taxes quarterly, so she also feels pretty comfortable that she's not going to owe that entire amount at tax time. Now, if she didn't pay any quarterly taxes throughout the entire year, that would be her tax liability. And in addition, if she didn't pay any taxes year-round, she may also be assessed a penalty. And that's essentially how she was able to now much better and more confidently understand her Form 1040 with all the attached schedules.